Real quick question. I've seen that you've done some work on YouTube with a former guest, Navy veteran Brian Burjans.
Right.
You get a chance to listen to his episode, his Borne the Battle episode?
I did.
He talked about some updates since the VA home loan episode that we did back in episode 150, like the elimination of the zip code qualifying how much a home loan can go up to. Was he pretty spot on to some of the updates?
Oh, I mean, without a doubt. I mean, he certainly knows the work we put into trying to get that done over quite a number of years, and how important it is to the to our veterans to be able to purchase a home anywhere. And I think that's the biggest piece to that is, when veterans signed up and they took that oath, we never said that when they came out that they could certainly use the benefit, but only use the benefit in these certain places. So being able to open up that aperture and allow them to really follow along the progression of their life has been an important key aspect of that change. And we can, we're starting to really see some positive movement in that direction.
Outstanding. Well, I do appreciate you coming on. The last time I interviewed someone from VA's Loan Guarantee Service was way back in episode 150. And that interview, I got to tell you, I got a message from one of my younger combat camera Marines from back in the day. And he was working with a nonprofit on learning about the VA home loan process. And they sent him to a resource, and it was that episode. And he's like, next thing you know, I was hearing my old sergeant on the VA's podcast. So I want to let you know that episode is actually being used out there by VSOs as a resource.
That is so great. And I believe you're talking about the episode with Mark Connors and Maxine Henry.
Yes, where they broke down the entire VA home loan process.
Without a doubt. And I actually got to listen to that myself. And they are such a testament to the passionate individuals we have working in this program and the knowledge that comes with that. So glad you did it. I am not surprised that that episode has helped some. Anytime I'm asked to be able to speak for the program, of course, is great for me, because not only am I passionate about this program, but I grew up in this industry, right? As soon as I got out of the military, I went to work for a financial services firm I went to college, and right out of college, actually while I was in college, worked at a financial services firm at that point in time, the largest in the world. And got to learn about mortgages and have been passionate for the industry ever since. So for me, it was a logical progression, to be able to come to the VA and try to make real and lasting change and impact for our veterans.
I like that there's so many veterans in your office and what you guys do. Before we dig into the subject at hand, like you said, you're a former Navy veteran yourself, Gulf War veteran. 30th anniversary this year, by the way. Our office listed multiple stories on the Gulf War on blogs.va.gov. John, 30 years ago today, now the war had been over for a couple months. Where were you 30 years ago today?
Wow. So I was on a submarine tender, and I had just been selected officer candidate school from enlisted.
Oh, wow.
And so I was on my way, actually going from Scotland to San Diego for officer candidate school at that time.
Oh, wow.
So huge transition in my life, right? Something that I had strived for a long time. And, it just flooded back the memories on me. But
It's what we do here at Borne the Battle. No worries. No.
I haven't thought about that in a long time.
No worries. Now, before you came to VA, like you said, you spent 15 years in the mortgage private sector, Bank of America, countrywide home loans. Your bio said that you led the design of a new portfolio retention strategy, which became an industry-leading model. Now, I'm intrigued. It's a lot of words. I'm a Marine. What does that mean?
Those that work with me know end user experience to me is key. And that has been my basically my mantra since I came here. I'm on a mission, and my mission is, what does the veteran, what does the lender, what does the appraiser, what does the servicer, what's their experience like when they come to VA
Yeah.
and they're looking for service? I did the same thing in the private sector, right? When I was in the private sector, I was the fixer. I was the person they sent in when things needed to um, to change, and whether or not that be internally or whether or not that be externally. So that was a time in my life when, from a portfolio retention, so it's basically, you're already on the books as a customer. How do we keep you happy, and how do you keep you coming back as part of our, really, the life cycle of experience with a loan? So this
And
was
I can see that being a difficult task, being the fact that a loan is normally a once a 30 years, once a 15 years, unless you're refinancing proposition to try to keep that customer.
Exactly.
Yeah.
Well, and it's, you got to approach it from a couple of different aspects. Borrowers always have questions that they're either, one, scared to ask, or two, and worse, as the internet has become more and more popular, you want to make sure they're getting the right information at the right time.
Of course. Yeah, absolutely.
Everyone is out there raising their hand and saying, "Come look at what what I have to say." And this was my experience, or this is what you should do. I feel like we want to be the voice of the veteran. We want to be that place where veterans are able to come and ask objective questions and get a response to that. And I think that the steps that we're taking over the past 7, 8 years, at the same time where volume has skyrocketed, for the program, we've really looked internally and say, how do we approach this from a people, process, technology point of view? How do we train our workforce? How do we educate the community? How do we improve our technology where people want to come to VA, and they want to come to VA multiple times over their lifetime? And so we've made strides in those categories. Just in the last couple of years, I don't know if you know this, but we went through a realignment in loan guarantee where we're trying to mirror the business sector, the mortgage industry, where we're more specialized from a leadership standpoint, where when issues occur, I don't have to reach out and talk to 8 different people that do it 8 different ways and try to get everyone on board. I have limited that leadership aspect where, if I have a problem, let's say in eligibility, and you're trying, and a veteran's trying to get their their certificate of eligibility, and there's an issue, I can pull 3 people in a room and I can figure out, what do I need to change? What resources do we need to put towards this to make these decisions in a faster and a quicker way? So it's really teaching ourselves to become agile as a business-oriented government agency, and operate in that aspect. Because, honestly, if I was looking for a home and I'm looking to VA, I want you to be that way. I want you to be cutting edge. I want you to be a leader in the housing industry. I want to feel like that my service meant something, and that I'm not just that place you go because no one else will take me. I'm that place to go because everybody wants to get in the door to use me.
Exactly.
That's the mindset that we have in approaching the delivery of this benefit.
Gotcha. You were talking about eligibility. I noticed that you guys did reduce eligibility from wait times from 2 weeks to 48 hours. I remember my first home loan was in 2017. I remember it being pretty quick, and that's outstanding and necessary, especially when I was in Charlotte looking at homes and it was a hot market. I wanted that certificate of eligibility as soon as I could get it. That way I didn't miss out on a home that I was looking at.
Yeah, without a doubt. I think it's certainly important. And I know that we can get into this a little later, how the industry how the industry is performing now, and what veterans are facing when they go and they try to purchase a home, because there's a lot of competing factors out there right now that would probably be helpful to understand why those factors are out there.
Well, like what?
Right now we've got very little inventory. We've got rising house prices. We've got a conventional market that has, that offers a property inspection waiver. We've got a lot of cash offers that are happening.
Yeah.
We've got houses that are going on the market, and before they even hit the market, they're getting above market price.
Yeah.
So to compete, if you're a agency and you know that there are certain things that you need to do to make sure that, speaking for VA, we have minimum property requirements. In other words, when a veteran moves into a home, we want to make sure that it's safe, sound, and sanitary.
Yeah.
Right. That's what Congress has entrusted us to do.
Yep.
It's not just about a veteran getting into the home of their dreams. It's about staying in the home of their dreams, and being able to not have to worry about exposed wiring, electrocuting people, ceilings falling down around them, when they've just made one of the biggest purchases of their life. So knowing those type of things, it's about arming veterans with the information that they need when they go to complete that purchase, and what that process is going to look like.
And to make it as efficient as possible so you can compete with that cash offer or those other types of loans that are backed or.
Without a doubt, right? I mean, here's the one constant that we know. The one constant we know is interest rates on VA loans are lower than their competition.
Yep.
So we already know right off the bat that, one, we have a little to no down payment loan, one of the few to offer that in the industry. On top of that, you're getting into a loan that has a lower rate than your competition. So that VA loan is valuable to our veterans.
Yes.
What we got to make sure is that it's competitive and remains competitive through that bid process, because the realtor's trying to make as much money for their sellers as possible,
and
right?
As quickly as possible.
Yeah. So some of the things that we're doing this past year is that automated COE capability, certificate of eligibility capability. We actually had a 10% increase in what we call automated issuance, where that means no one has to touch the file and make a decision on the file. It's you go through your lender, or you can go through eBenefits, to select your own. But we raised that from 65% to 75% over this last year. So 75% of the time that you go to get that certificate of eligibility, you're not having to talk to anybody. It's instantaneous. You hit, "Am I eligible?" And you get your eligibility. So that is a huge competitive advantage for us, because that's just a lot less time that you have to wait in which to know that you're eligible for that loan.
Outstanding. Speaking of recent news, I recently read off a press release in a previous episode talking about the extension of the moratoriums of evictions, foreclosures, and the extension of the time to submit a CARES Act forbearance. I know many veterans, many of whom have fallen on hard times, appreciate that. What this is doing. My question is, what is this doing to the entire industry, and how can it affect veterans buying or selling homes like a year from now?
Look, these are unprecedented times, and sometimes in unprecedented times, you have to make decisions.
Yeah. And I know you don't have a crystal ball. I know that was a loaded question.
It was, but look, it's not the first time that I've asked that. And to be honest with you, if I'm a veteran out there, I want to know that as well, right? I don't know that we truly know the effect downstream. What I do know, meaning a year, 2 years from now, 3 years from now, but what we do know is what do veterans need now? And the
Yeah.
important thing is we've got to make sure when I said at the beginning that it's just as important for a veteran to stay in that home as it is to put them in there.
Yeah.
We have to give that ability to our veterans as much as we can. And while we have to make decisions now, we have to also address what happens long term. And long term, we know that there are going to be other steps that we need to take to help protect them once forbearance ends. At some point in time, that you're going to move on because of the life goes on, right?
We're gonna be able to get over this hump.
Correct. And so we're still working on some some things for veterans that I'm in the process where I really can't talk about those type of things yet, just from a legal standpoint.
And it's not set in stone or anything, I'm sure.
And it could change overnight, but there's not a day that goes by that we're not thinking that 2 years in advance, 3 years in advance, and those kind of things. And I can't answer that question in totality, but I think the main thing is that there will be there could definitely be a hit, right? I mean, we know that there's going to be a backlog of foreclosures and those kind of things at some point in time. And it's a matter of us working with the other agencies, all of us collectively doing what we can to soften, to help that process. Yeah. Because what we don't want to happen is VA standing alone on an island, and this benefit is somewhat different than everyone else when it comes to that. So we're working hard to push the agenda of protection, with the other agencies, so that we're going lockstep, with them and as a collective when we can.
Totally makes sense. It's just good to know that that is a that's a thought that a lot of us are thinking about, and that's something that we're working on. That's awesome. Well, John, the reason I wanted to meet with you, for right now, you've talked about a lot of things that are happening right now in the industry. Well, for the past 6 months, I've noticed that rates have fallen to historic lows. Matter of fact, I'm personally being reminded of that fact every day, all the time, through the mail. Use your IRRRL, use your IRRRL, use your IRRRL. And people are probably thinking I'm saying the name IRRRL. What I'm saying is the acronym IRRRL. What are you seeing in the rates, the finances right now?
Oh my goodness. Those that know me know where I'm going with this. So
okay.
You have. I'm very passionate about what the IRRRL is supposed to do, and the IRRRL is there to put our veterans in a better financial situation,
and to take advantage when those situations come. Right?
Correct. It is there for you to save 0.5 point on your interest rate that you already have. It is there to lower your monthly payment. It is not there to be used as a loss mitigation option. And what do you
mean by that?
It's also, in other words, it's not designed to be there to skip payments, right?
Good.
Because it only puts you further behind.
Yeah.
And when we talk about short-term versus long-term, the financial impact of those type of decisions put you in a worse situation than it would if you are taking out an IRRRL for the right reasons. And there are tons of great reasons why you would want to use an interest rate reduction refinance loan.
Okay. What are some good times to refinance?
You just mentioned a great time, right? And that's when interest rates are at all-time lows and you haven't refinanced for a while. It is when you know that you can save on a monthly payment and either cover your own closing costs when you go to that refinance, and not continue to stack on closing costs. Because to be honest with you, IRRRLs are always pretty good. If you're going to lower your interest rate and you can bring your closing costs to the table and not roll those closing costs into the loan, it's always going to it's always advantageous to use that. And there's not a set number of times you can use it, as long as you wait 6 months in between the time of the old loan versus the time of the new loan. you can refinance multiple times. But where it really hurts you is when you are refinancing multiple times to save like an interest rate or save in a monthly payment, and you keep rolling those closing costs in.
Sure.
Because at the end of the time, the long-term impact on interest is what always kills you. Shorter term is always the best route to go. That is the less interest that you're going to pay over the life of that loan. So if you keep going back to a 30-year term,
yeah, keep resetting the clock,
and you're rolling closing costs on top of that, you're setting yourself for long-term failure.
My uncle always tells me, and he retired in his 40s. God bless him. He always tells me, do the math. Do the math, Tanner. How much are closing costs? And he always asks me, how much are closing costs? And he always says, do the math. How long are you going to stay in that house? And he's like, okay, if you're going to pay this much in closing costs and you're going to save this much money a month in your monthly payment, this is how many months you need to stay in that home to make it worthwhile.
Great advice. Couldn't say it better myself, because that is exactly what you should be doing every time you're looking at refinancing your loan. Even on a cash out, right? I mean, you can do a cash out refinance loan.
Yeah.
Cash out refinance loan is a little different because at that point in time, you're going to be fully underwritten. Versus an interest rate reduction refinance loan where you're not going through the full underwriting phase. It's basically, I want to do an interest rate reduction refinance loan. I'm going to sign my name. We're going to refinance the loan at a lower interest rate. That's what it's set up for.
Yeah.
A cash out loan, if you're going to pull equity from your home, what I would look to is what are the net tangible benefits that you're going to get out of doing that cash out, right? What are some concrete reasons why you actually need that money to pull out of your equity of your home and utilize it? And there may be, and there are good reasons for you to do that. But like your uncle said, you gotta write those reasons down. You got to do your pros and cons. It really comes to an individual need at that point in time as to whether or not it makes financial sense for you to do it. And you know what? It might not make immediate financial sense, but it might mean that you need an extra bedroom on your home. It might mean you need, to utilize that money for some health need, for your family. That if you don't have it, then really bad things could occur. So I think that there are specific times where equity can be used in your home for good. It's just a matter of, does the need outweigh the dollars and cents of things? And so if my advice to anyone that's listening is just exactly what your uncle told you to do. Sit down, have a plan, figure out whether or not the cost of this long term, the cost of taking out this equity long term outweighs, staying put.
Yeah. So I've considered both. And so what you're saying is, don't take a home equity loan to buy a Mustang and have fun. Take a home equity loan out to either improve the house to make it even worth even more before you sell. That I've been told that's a good option. Or like you said, to pay a health benefit and you can afford the loan payment and what it could be. And then the rate reduction, like you said, the IRRRLs, again, historic lows. Thought it'd be a good time to approach this subject. But I think it is important that, and you did say it, every time you refinance, you're resetting that clock, whether it be a 15-year loan or a 30-year loan. You have to be cognizant of that.
Without a doubt. And I would always look, if you have the financial means, always look at a lower term if you can. Now, granted, in this marketplace right now, because rates are so low on 30-year fix, really difficult to get in a 15-year fix that's different.
Tracking.
Right? Normally, a 15-year fixed rate is going to be lower than your 30-year fixed rate.
Yeah.
In a market like this, they're about the same. So, but again, it's also long-term interest. So if you're going to, you just have to to marry, is the interest that you're going to save worth having the same rate that you would on a 30-year? Or do you want to take out a 30-year and you figure out how you want to pay that mortgage, whether or not you want to make an extra principal payment a year, or send a little extra every month that will cut down on that interest as well and do the same thing.
Gotcha. Okay. So how do IRRRLs work? Where do you start? Like is it like a normal home loan like we talked about in 150, where you start with the certificate of eligibility, start with a pre-qual with a lender? Where do you start on, like, when you're like, okay, I want to do an IRRRL?
Well, first of all, I would like to think that that you're able to start, but being a veteran and having a VA home loan myself, as do you, we know we're flooded with those IRRRL
Sure.
mailers like 17 a day, right? And so we're trying to. I will tell you this, that we're trying to work with CFPB, and other agencies to help us understand and enforce, some limitations to those mailers. It just gets really hard and really foggy because a lot of those mailers you're not getting from lenders, you're getting from what's called lead aggregators.
I got one from somebody in a local town, and it had a business card on it, and I was like, "You're not a bank, I have no idea." So I know, all I know is that rates are really good right now to do an IRRRL, but I don't even know where to start.
Almost everybody knows a lender. If not, a realtor. I would ask their advice on, if they know, good lenders that do VA loans, because that's what we find is the biggest issue is you may have the best company in the world, but if they don't know how to do a VA loan, it just brings confusion to the process that you don't necessarily need to have in the process. I mean, the VA loan, it closes in the same amount of time than any other loan closes. It has a lower interest rate than other loans. If you look and you compare VA loans to the conventional market space from a debt ratio, credit score, even though we don't have a credit score requirement, but all of those factors line up, right? We call them characteristics. So VA is not so much different than everybody else, but it's a matter of the time that it takes to do them,
and the knowledge of the lender, knowing what to do when it comes to a VA loan.
Correct. You have got to feel comfortable with your lender. It is not. Here's the other advice. It's not all about rate. It's about comfortability with the person that you're working with. It's about the comfortability with the program, on whether or not they have the experience with VA. What you see when rates are as low as they are, you may get an eighth of a point here or an eighth of a point there better, but the time that it takes to close your loan may increase by 2 to 3 months, depending upon what type of lender that you're choosing.
Okay. What's your time worth?
That's a question you should ask yourself, right?
Gotcha.
And the same thing goes for purchases too, right? We just talked about refinances, but for purchases, if you're going to purchase a home, you're going to have realtors that suggest you lenders to work with. Does that mean you have to use that lender? No, the option's up to you. But if you feel comfortable and you know that they, I think some key questions that you should ask, whenever you get that lender on the phone, is how many VA loans do you close in a year? How familiar are you with the COE process? Do I need to get the COE, or are you going to get the COE? And if a lender tells you that you have to get the COE, it's probably not the lender you want to use, because they haven't done many VA loans.
Yeah, every lender I've dealt with seems they know how to get the COE on your behalf. So
yeah,
that's kind of like a basic thing. That is a good question, a good basic question to ask your lender. So when it comes to refinancing your home to do an IRRRL, is it pretty, if the lender knows what they're doing, is it pretty similar to what we talked about in episode 150 as far as the process?
It is. It
Okay.
is. It's even quicker most of the time.
Okay.
The only thing that holds up an IRRRL from being able to close in probably 20 or less days at this point in time is because just the sheer number and volume that the lender is going through holistically because interest rates are so low.
Gotcha. Closing a refinance, closing an IRRRL. I know there are some closing costs. You're not gonna get a lower rate without a little something. What fees are negotiable? What isn't negotiable? You talked about rolling it.
Mhm.
You talked about rolling it in your loan, and talking about not rolling in your loan. I didn't even know that wasn't even an option.
All right. So this is a really, really good question. And first of all, let me start off by saying there are a ton of lenders out there that do not charge lender fees on IRRRLs. There are a ton of lenders out there that don't charge lender fees on purchases for VA. And that would be one of those questions I would ask, right?
Yeah.
So, and we're talking about lender fees. What we're not talking about are third-party fees. So what third-party fees are title. They would be appraisal. But underwriting would be a lender fee because that underwriter would work for the lender, right? But anything that the lender themselves isn't doing would be a third party fee. Credit, credit is a third party fee, right? But an underwriting fee, a processing fee, or anything like that, those are the lender fees. And we do allow up to 1%. In most cases. But that would be a question I would ask because not all lenders charge those lender fees to do VA loans.
Do they? But things like you said, but like title writing, that's a third party. Are there taxes involved? I'm probably pretty sure at some point.
There are taxes and insurance from an escrow standpoint.
Yeah.
But they do not charge you to escrow. So this is another big misnomer is that the VA requires you to escrow or the VA doesn't require you to escrow. Escrowing is between you and the lender. And if the lender does escrow that into your payment, so the taxes and insurance, into your payment, that's for a service because to be honest with you, it is safer for them to do that than for you to say, oh my goodness, I forgot to pay my taxes this year.
Yeah.
And now you've got a problem where you might be looking at a lien or something else that could creep up that could affect that title. That deed.
I would much rather send the entire mortgage plus taxes to the lender and just have the lender handle that business.
I do personally. I have always done it. What's good for me, I would hope would be good for others, especially being in this business literally my entire life, other than being in the military.
Yeah.
But I do as well. But that is not a charge. The lender will not charge you for that. That is not a fee. There's not a fee to play. To do that. They literally calculate the taxes and the insurance for a certain number of months. They keep that in an escrow account and they pay your taxes and insurance from that escrow account.
Yeah. No, I would rather, I mean, I can imagine if a lender did have a fee, there's an immediate competitive advantage for another lender to go, no, we do escrow for free. Outstanding.
Now, condo and HOA, those may not. You may have to pay those directly. They normally don't escrow for those, but
I have to pay a CDA as well. And here we're getting into personal stuff. I got to pay a CDA, a community development assessment tax. That's not in my escrow account. I need to get in my escrow account, but that's all working with your lender, right?
Yeah, don't you love that? I mean, I love to be honest with you. I love the terms that they come up with, right? Like I think now some of them are called regime fees, right? So,
oh my God.
I mean, we see, just the what you see, whether or not it's HOA or condo or whatever, just some of that terminology cracks me up. But, most of us pay them. I guess it's just a way of life. And that's no matter whether or not you're a veteran or not a veteran.
Tracking. Yeah. The closing fees. Like I said, I didn't know you can roll that into your loan. That's probably just a lender conversation between you and your lender, whether they do that or not. Right.
Yeah.
Gotcha. Tracking. Okay. Rates. Everyone always wants to talk about rates. What is an effective way to shop for the best rate and avoid predatory lending? And I know that's probably two separate questions, but I had it written here as one.
I again love this question as well, because I think something needs to be said about when you shop online for an interest rate. And let's just say you go to money.com or, pick the 1,700 probably websites out there that offer you an interest rate comparison. Most of those are done at an 80%, so 20% down, the highest credit score that you have. So say it at above an 800 credit score or above a 760 credit score. So when you see those published rates, they may be a little different than
based on your credit, based on
your credit, based on the type of loan. Again, though, what we have found, historically, especially lately, is that with VA, even at no money down, is very, very competitive, if not a quarter point lower than most other
refinance
loan products. Yeah. Refinance or purchase.
I've noticed that. I'll tell the story again. I told it in 150. I personally went to 3 of my more trusted VA loan lenders out there in the marketplace and just went through the process with all 3 of them, and then let them bid against each other. Would you recommend that strategy, or is there another way to go to shop for a rate that maybe is a little bit more efficient?
I will tell you, maybe to a point, but at some point you also have to realize that these lenders, they're not working. Most of them don't work off salary. Most of them work off commission. That's the only way they get paid.
Oh, wow.
And so they want you to get the lowest rate. It doesn't behoove them, because they don't get. It used to be in the old days where, there was your par rate, and then how much ever above that, then you got to, but you got maybe more money. Since the 90s, though, those are, we don't see that as much, because CFPB certainly, from a disclosure standpoint, has really cut down on that type of behavior. Again, I would say that in almost every circumstance, like, the difference in an interest rate is a quarter of a point here and there for most of your reputable lenders anyway. And you just see very little difference. I don't know what your experience was, but you should have seen very.
It was very interesting.
What you may see is what they do. What they'll do sometimes is they will charge you in another way. So say it's a discount point, or it is a origination fee, or it's those lender fees where they're making up the difference in those in other ways.
Oh, trust me, I was negotiating those as well. I did see a difference in about a 1/4 to 0.5% on some of them.
Wow, 0.5%. Now
this was 3 years ago. This wasn't anytime soon. This wasn't like what rates are now.
Okay.
Or actually no, it was a couple years ago. This was on this home build, but maybe it's different now, but I didn't know if there was a more efficient way to shop for a rate, because again, you got to go through the process to get the actual rate. I
think there's nothing wrong with using the internet as a guide, right? But just know that those aren't going to be your actual rate when you go to a lender. It's almost like, I'll give you an example of this. For those of you that use and I do myself, right? From if you've ever heard of leading indicators versus lagging indicators, right? So these online credit bureaus that you can pull yourself, these companies that you pay to do so, they're fine as long as you know what you're getting. They are a good leading indicator to whether or not you have good credit or not, right? But what they aren't is a replacement for what the mortgage company is going to pull, because there are a lot of other factors that a mortgage company is looking at other than just credit card debt and how you pay down on your credit card debt.
Yeah.
Because a lot of the criteria for that is really heavily weighted on how much of your payment that how much of your overall balance on your credit cards you pay every month down. And so that may or may not necessarily transcend into what your mortgage credit score is going to look like. So again, good leading indicators, same way with with interest rates. Just be wary that it's not the end all be all. And what you see online might not necessarily transcend exactly X's to X's, apples to apples to what you see, what you get from the lender.
Talking about those mailers, it was a good way for me to understand what the rates were, what rates are going to, that, they're at a 50-year low or whatever. But how do you avoid the predatory ones and making sure you're picking the right one? Because, I've looked at some and I'm like, okay, I know that name. I saw that name on TV. This one, I have no idea, but the rate is really low. And this one, again, like I said, was like, this one's really low, but this is a business card from a local person in town. How do you decipher some of these mailers that a lot of people are getting?
I personally, and I'm probably going to get in trouble for this, but I personally, I've never used a mailer to get a mortgage, right? I just haven't. I would rather initiate. I'd rather be proactive. We all have banks or credit unions, and Navy Federal or USAA or Bank of America or whatever. I think those are really good starting points. Know that they aren't necessarily, they don't necessarily just specialize in mortgage though, right? So that might not be the lowest rate. It might not be the fastest closing, or it may, but just know that, transactional, banking and those kind of things are carry a heavy weight with them in other areas, and maybe not mortgage, but being proactive and knowing the actual company that you are dealing with and finding kind of like where rates are, probably would be a little better for you to do. And then word of mouth, expertise, those kind of things. And I would just marry those two together to find what you feel comfortable with from an individual.
Better Business Bureau is a good.
Better Business Bureau is a good one. CFPB, it has a lot of really good tools on their website, which is the Consumer Financial Protection Bureau.
Yeah.
They're another good place to start. We actually, on our website, we list volume by lender, so you can actually see what lender is. How lenders are performing and just doing VA.
Wow.
So that could give you an indication of kind of who's experienced in offering VA loans. But what it doesn't do, and I want to make sure that people understand that while we're putting those numbers out there, that's just volume. That is not
quality,
an indication of quality. Yeah. Yes.
Yeah. Gotcha. Very good. Okay, John, is there anything that I've missed in terms of IRRRL or forgot to ask you that you think it's important for veterans to know?
Just be careful. I love what your uncle said, because that is so true. In making good decisions when it comes to refinancing.
Do the math.
You know, you got to do the math, and you also got to understand the decision you're making in the short term and the consequences in the long term. Not saying IRRRLs or refinances is not a good thing. They are a great tool. They're a great thing to have in your back pocket. I would just be tactical when I use them. But my other thing is if you have not used us, you have not used your benefit, then you don't know what you're missing out on, because I still say that it is the most competitive and the best option for veterans out there, whether or not you're purchasing or you're refinancing. So if you haven't tried us, do. And we would love to hear your feedback and your experience, because again, end user experience is probably one of the most important things that we look at on a daily basis.